Welcome to the Deep Dive. Today we're zeroing in on Balu Forge Industries Limited. BFIL, as they're often known.
Right. An Indian company, been around for, what, over 30 years?
Yeah, specializing in forging and precision-engineered products. They've got manufacturing in Karnataka, also the UAE.
And a pretty big global footprint, too, shipping to over 80 countries. Quite something.
Exactly. So our mission today is to sift through their latest reports, FY23, FY24, and really pull out the key stuff.
Understand how they tick, their financial health, growth prospects,
Yeah.
and what it all means.
Perfect. For anyone wanting the core insights without drowning in report pages, this is for you. Let's kick things off with what BFIL actually does in the environment they're in.
Sounds good. So BFIL, they make a really wide range of forged and precision-engineered bits and pieces.
For quite a few different industries, right?
Oh, yeah. Automotive, agriculture, defense is a big one now, oil and gas, flow control, railways. It's diverse.
Any specific examples? Like what kind of parts are we talking about?
Think crankshafts, railway wheels and axles, which are, super important with India's infra push-track shoes for heavy gear, drive shafts, stainless steel flanges, all sorts.
Okay, quite a spread. And they're operating in India, which has seen some pretty impressive growth.
Definitely. GDP growth was around, 7% in FY23, and manufacturing really jumped in FY24, like 11.6%. That's significant.
People keep talking about India becoming a manufacturing powerhouse, maybe third largest economy soon.
Yeah, by 2027 is the projection sometimes mentioned, and that's a major tailwind for a company like BFIL. Think about the auto sector.
Right, expected to be third largest globally by 2030.
Exactly. And you've got government schemes like PLI boosting it. Then there's Indian Railways. Massive development plans. That means demand for their railway parts.
And you mentioned defense. That seems to be a huge focus area in India lately.
Absolutely huge. Budgets are up. Big push for indigenization, making stuff in India.
Right, the Make in India initiative.
Precisely. There's a target of, I think, $25 billion in defense production by 2025. And defense exports hit a record high in FY24. So lots of potential there for BFIL.
Okay, that sets the scene pretty well. How about the company itself? How is it structured? Who's running the show?
Well, the board of directors has the overall responsibility, obviously, and they've set up committees for specific jobs.
Standard practice.
Yep. The audit committee met 4 times in FY23, nomination and remuneration just once, stakeholders relationship committee twice in FY24, risk management and CSR committees both met twice in FY23. Shows they're ticking the boxes,
And the key people, the management team.
You've got Jaspal Singh Chandok as chairman and managing director. Then Tramayan Chandok and Shekaran Chandok are whole-time directors. Sounds like they're deeply involved.
Okay.
There were a couple of changes recently, too. Akash Joshi was company secretary until June 23. Then Tabassum Begum took over. And Mitesh Dani was CFO until May 23, replaced by Amit Tadkari.
Right. Changes in key roles are always worth noting. Does BFIL operate just as one entity? Or are there subsidiaries?
They do have subsidiaries. Naya Energy Works Private Limited, Balu Advanced Technologies and Systems Private Limited, and one called Safa Automotive FZ LLC.
Okay. The reports probably don't detail exactly what each one does.
Not in these excerpts, no. But it's common, right? Using subsidiaries for different markets, R&D, that kind of thing.
Makes sense. So we know what they do, how they're set up. What about the winds affecting them? What's pushing them forward, and what are the potential challenges?
Okay, tailwinds look pretty good. Demand is up across those key sectors. Auto, railways, defense, that's huge.
Plus the government support you mentioned.
Exactly. Support for manufacturing, infrastructure spending, it all helps. Export growth, especially defense, is another plus. And this whole Make in India local sourcing trend benefits them.
And maybe companies looking for alternatives to China. Supply chain shifts.
That could play a part too, yeah. Definitely a potential tailwind.
All right, what about the other side? The headwinds. What could slow them down?
Well, the big one is always a potential global economic slowdown. Even if India is doing well, a global dip can hit exports, maybe even domestic demand eventually.
And their sectors are competitive.
Very. And often regulated. So you constantly need to adapt, invest in tech, keep costs down. It's a nonstop pressure in manufacturing.
Understood. Let's talk growth potential then. What are they doing to expand?
Capacity expansion is a big focus. They bought a precision machining unit in Mannheim, Germany, finalized in FY22. Integration was expected around Q2 FY24.
And that adds significant capacity.
Supposedly boosts them to around 30,000 tons total capacity. So yeah, a major move, shows ambition.
And it's not just about building more, right? Innovation matters.
For sure. They mentioned R&D, looking into new materials, advanced manufacturing methods, even things like 3D printing.
Interesting.
And they're specifically targeting more products for railways and defense, those high growth areas we talked about. Plus, their existing global setup helps India, UAE, selling everywhere. Solid base.
How did all this translate into results recently? FY24 sounded good.
Yeah, FY24 was apparently a record year for them. Highest ever revenue, EBITDA, PBT, P2T, the whole lot.
Wow. Why the big jump?
They put it down to a mix of things. Broader product range, just generally higher demand, export growth kicking in, selling more high-margin stuff, and getting more efficient operationally.
Okay, sounds positive.
Okay.
But every investment has risks.
Oh.
What should people be aware of with BFIL?
Well, the company says they have risk management processes across the board. The reports we saw don't list every specific risk in massive detail, though.
But generally, for this kind of company,
You'd think about things like raw material price swings, changes in government rules, competition, obviously, maybe supply chain hiccups. The usual suspects for manufacturers in these fields. You'd need their full risk disclosure for the nitty-gritty.
fair enough. Let's look at the people in charge. What's the sense of the management quality?
Jaspal Singh Chandok leads as chairman and MD. Traman Chandok seems quite key, third generation, focused on manufacturing, innovation, productivity, getting into the OEM market, and handling the public listing side.
So driving change, it sounds like.
Seems that way. The company also talks about hiring good people, having a positive culture, inclusivity, diversity, social responsibility. They mention ISO certifications for quality, environment safety, plus training programs, suggests a focus on doing things properly.
And their track record. How have they performed against maybe what they've indicated previously?
Well, these specific reports didn't give us, detailed forward guidance to check against, but that record revenue and profit in FY24 speaks volumes, doesn't it?
Yeah, strong recent performance is hard to argue with.
And successfully buying and integrating that German unit, that's a big strategic move they seem to be pulling off, shows execution capability.
Okay, let's get into the weeds a bit with the financials. Balance sheet, cash flow. How healthy are they looking?
All right, looking at the balance sheet for FY24, non-current assets went up quite a bit.
Mostly that capital spending for expansion, presumably.
Yeah, lines up with the German acquisition and other capacity increases. Interestingly, current liabilities actually decreased. They say that's down to better working capital management.
Which is usually a good thing. Less cash tied up.
Right. But on the flip side, non-current liabilities increased. They took on more long-term bank debt, likely funding that expansion.
Makes sense. What about key ratios investors watch?
The current ratio improved, and the debt-to-equity ratio went down in FY24.
So better short-term liquidity and less reliant on debt relative to equity, generally seen as positive steps.
Correct. And their cash balance was up as of March 31st, 2024. One interesting point, the board decided to keep all the FY24 profit in reserves, didn't transfer it elsewhere or pay it out.
Reinvesting everything back into the business then. And cash flow, where'd the cash come from and go?
Operations generated positive cash flow. The core business is making money. Investing activities showed cash out, mainly for that capital expenditure, as expected.
And financing.
Cash in from financing, through increases in both borrowings and equity, again, consistent with funding growth.
Got it. Now, the forensic side. Any signs of potential financial issues? Credit rating.
Okay, the auditor's report for FY24 gave what's called an unmodified opinion on the financials and internal controls.
Meaning they didn't find any major problems. The clean bill of health, basically.
Essentially, yes. That's what you want to see. The directors also signed off saying the accounts give a true and fair view.
Standard stuff.
But
important.
Yeah. The secretarial audit for FY23 had some standard caveats saying compliance is management's job, their review is limited, it's not a guarantee of future viability. Pretty standard language for those reports. They also noted compliance with rules around loans, investments, etc.
But no specific credit rating mentioned in these documents.
Not in the excerpts we looked at, no.
Okay. So pulling it all together, how is BFIL actually creating value for its shareholders?
Well, number one is that record financial performance in FY24. Higher revenue, higher profit. That's fundamental.
And the growth plans.
Exactly. The capacity expansion, the strategic initiatives, they're all aimed at future growth, which should ideally translate into a higher share price over time.
The improving balance sheet helps too. Lower debt equity.
Yeah, suggests a stronger financial footing. And they proposed adding another independent director, Mr. Sumer Singh, which points towards better governance.
But no dividends.
Correct. None declared or paid for FY23 or FY24. So for now, shareholder value is primarily about potential capital growth, not income.
Right. So let's boil it down. If someone's considering investing in BFIL stock, what's the main argument for it? The thesis.
The thesis is built on that strong FY24 performance, the clear growth path through expansion, especially targeting booming sectors like auto, rail, and defense in India. Add in their global reach, improving financials, management's focus on quality.
Plus the whole positive India growth story backdrop.
Exactly. Favorable macro trends and government support really bolster the case.
Okay. Now what's the counter-argument? The antithesis? The reasons for caution?
Main point would be their dependence on cyclical industries. Automotive, infrastructure. They go up and down with the economy.
So a downturn could hurt them.
Definitely. Global slowdown risk is real. Competition is fierce, meaning constant need for investment. The lack of dividends might put off income investors. And, big expansion projects always carry execution risks.
Right. Integrating that German plant successfully, getting the expected returns, it's not guaranteed.
Precisely.
Okay, so summing it all up.
Look, BFIL seems like a solid, established player in Indian forging, really hitting a growth spurt right now. Strategic moves, strong recent numbers, good macro trends, lots going for it. But investors need to weigh that against the cyclical nature of their business, the competitive pressures, and the fact that they're currently plowing profits back into growth rather than paying dividends.
A lot to chew on there. So the final thought for our listeners. As India pushes forward with its economic ambitions, building out manufacturing, building out infrastructure, what kind of role will companies like Balu Forge ultimately play in that future? And what does that mean long-term for everyone involved?
Good question to ponder.
Definitely. Thanks for taking this deep dive with us today.
My pleasure.
We'll catch you on the next one.